Hi, I'm Rob Harper, and welcome to Right Now Network's Right Now podcast. My guest today is Kevin Guttman. Kevin is a licensed mortgage banker. How are you, Kevin?
I'm great, Rob. How are you doing?
Good, good. So today, if you guys haven't realized, we're going to talk about finances. More so, finances for those individuals who are looking to retire. Kevin has written three books actually on retirement. Most of them dealing with reverse mortgages. So, Kevin, tell us a little about your first book. The title is The Swiss Army Knife of Retirement.
So I wrote that in 2017 because most people have myths and misconceptions, misperceptions they believe about reverse mortgages. So it's 32 stories of how people have used equity in their home with a reverse mortgage to improve their lives in the areas of housing, cash flow, medical dream, and legacy. These are clients where I just wrote about their story and changed their names, obviously, to protect their privacy. But I wrote it to educate people and to give seniors coming into or in retirement hope.
Right. Kevin, why do you think there is such this hesitancy for a lot of individuals, especially older, to consider reverse mortgages or even look at the product?
I think some of it has to do with just how they grew up. Uh, that the previous generation, the great generation, greatest generation, Tom Brokaw called them. They are product of the Depression. They were taught you pay your house off as soon as you can. They're frugal, somewhat skeptical too.
Mhm.
Baby boomers, on the other hand, are a little more open and willing to use debt in their favor. And so the tide is shifting. People are becoming more open minded as they learn about how the program has changed over the years and improved and become safer for seniors.
Okay. And individuals who are looking at retiring are considering, let's say, looking at the product reverse mortgages. Who do you think, or what do you think they should be looking, and what types of questions should they be asking?
Uh, Good question. One would be to position themselves to take advantage of it. So the earliest somebody can get a reverse mortgage is 62. So to be in a position where they could eliminate their mandatory monthly mortgage payment at 62, which means they'd have to have at least 60% or more equity. Then what they could do, I call it killing four birds with one stone. They could eliminate their mandatory monthly mortgage payment. They take that money they were paying on their mortgage, let's say it's 1,500 a month, for example, and now they start putting it into their 401k or IRA during their working years. They delay Social Security until age 70. And then at the end, when they're ready to stop working, they have no mortgage payment. They have a line of credit on their equity that's growing four. That's the fourth bird. I didn't mention it. 4 to 6% a year guaranteed compound interest. They have a stronger 401k or an IRA, and they have the max Social Security they can access. So they're in so much stronger position as they approach or go into retirement.
Right. And aside from that, Kevin, individuals who are looking, like you said, the earliest that they could do is at 62. Once they start looking at it, what should they talk to their families about? How should they prepare their families to let them know, hey, this is something that I'm considering? Because again, a lot of them are thinking, I don't want to leave my children with a big debt.
That's a great question. It's interesting because a lot of times when the children are in the meeting with the senior, when I sit down with them, the kids are all for it. Here's what they say: Mom and Dad, we want to be sure you're going to be okay. If this is what you need, you do it. We're going to be fine. I think what it comes down to too is, and nobody says this, but the kids don't really want mom and dad to move in, and mom and dad don't really want to move in with the kids. They don't. Seniors want to maintain their independence,
Right.
and they want to stay at home. They're comfortable at home. So what they need to be looking at is this the right house for this stage of life? Because a lot of people, they raise their family and they've just been in their house 20, 30 years and now they're all alone. They never go downstairs anymore. They live on one floor. Maybe they can't do the stairs anymore. So
Right.
that's the first question. Is this the right home for this stage of life? So that's important to be living in the home that you ultimately want to live in before you go on to heaven or go to the senior living center if you need to do that. So
Mhm.
is this the right home? The second thing is, do we have enough resources? The number one fear that seniors have is outliving their money. Think about this, Rob. Their whole adult life, money's been coming in, money's been coming in, money's been coming in. They're paying their bills, everything's fine. Now, in their retirement years, money goes out. It just goes out. It
Right.
doesn't come in anymore. And so they see these assets just depleting all the time, and they don't know how long they're going to live. They don't know what quality of life they're going to have, so they're nervous. They don't think they have enough. What a reverse mortgage does is we all have three buckets of money. We have our income, our assets, and our equity. If people tap into equity, it allows the other two to last longer. So it gives them peace of mind, I guess you'd say, that maybe they'll be okay and won't outlive their money.
Right. Right. So the other question that I have for you, Kevin, is what are some of the mistakes that people make when they're looking at reverse mortgages?
Yeah, I think one is they don't get updated information. So the last few years, the program's changed. It's gotten safer for seniors. Um, they fixed some of the problems that they had over the years with the program that would make the national news.
Hmm.
Uh, a senior getting foreclosed on because they didn't pay their property taxes, or
Right.
a wife having to move out if their husband died and they weren't on the loan. They fixed that with two things. One is called financial assessment, where we have to prove the senior has enough income to pay the property taxes and homeowners insurance and maintain the home. So they're qualifying for the loan. It's not you have enough equity and you're old enough. Now they have to show they have enough income as well. And the other one is if they I just lost my train of thought. Can you repeat the question?
Well, the type of the mistakes that people make when they're looking at
Mistake.
getting a reverse
Updated
mortgage.
information. So the non-borrowing spouse was the other thing I was going to mention.
Hmm.
The way it used to be is if a wife was younger than her husband and wasn't on the loan and the husband died, she'd live in their house all these years. She'd have to move. Well, that's silly. They fixed that now. Now we have the non-borrowing spouse, and even if the wife is younger than the husband, isn't on the loan, if the husband passes on, the wife can remain in the home. So that's what I'm saying. They've really listened and fix the problem areas that were causing people grief
Right.
and difficulty when the heirs would go to sell the house. So let's talk about that for a second, because you mentioned about how does it impact the heirs.
Exactly.
So at the end meaning when the last borrower has to move out, they either go on to heaven or they go live somewhere else. They don't live in the house anymore. The heirs can refinance the house, keep it as a rental property. They can refinance the house and move in. It's interesting, less than 1% of the children want the house because they have their own house.
Right.
But every parent thinks, my kid, I'm saving my house for my kid. You're saving the equity for your kid, not the house.
Mm.
And then the third thing is they can just sell it and pay off the note. If, by chance, it's remote but possible, the house ends up owing more than it's worth. In other words, the value is 300 and they owe 350, for example. The heirs can buy it at 95% of the appraised value. The immediate heirs, the children, can buy it at 95% of the appraised value, which in this case would be 285. So they owe 350, it's worth 300, they're buying it for 285. Only the heirs can do that. Who makes up the shortfall? This is the unique feature of a reverse mortgage. It's a non-recourse loan. So there's mortgage insurance that comes with it. And the mortgage insurance makes up any deficit or shortfall at the end. So neither the heirs nor the borrowers get a bill at the end. So that's how the heirs are protected. Long answer to your question. Sorry.
Okay. And what about mortgage insurance, private mortgage insurance? How does that even come into play?
That's the protection that the senior and their heirs have. Is they won't get stuck with a bill at the end. The mortgage insurance will kick in and make FHA whole. And as a taxpayer, I appreciate not being on the hook for my neighbor's reverse mortgage that ends up underwater. And as a son, I appreciate not having to make up the shortfall for my parents' reverse mortgage if they end up underwater. So I'm not a big fan of government programs actually,
Hmm.
but in this case, they've thought through it pretty well and it works well for senior homeowners.
Kevin, how did you get involved in all this?
Well, my dad was a real estate investor and a realtor in Southern California in the late 70s. He owned 20 properties. I call them golden geese. And he retired at age 48 from the rental income from those properties. And his wife was not a fan of the rentals because she was the one who would clean them when the tenants moved out. And so one by one, um, he encouraged him to sell them off. And over probably 20, 30 years, he sold them off. At the end of his life, my dad suffered with dementia and ultimately had to go live in a state-run facility. because he died penniless. He didn't have any money at the end because he had killed the golden geese. And if he had used something like this program we're talking about, he could have stayed in his house, not have a monthly mortgage payment, accessed his equity, and had a better life in retirement. So when I saw that happen to my dad, I said, look, if it can happen to my dad, who was a millionaire by
Hmm.
age 48, today it'd probably be worth 10 million in assets, those properties in Southern California. It can happen to anybody. And I
Right,
want to be sure that people know what their options are. So
right,
that's why I'm doing this, to just really educate seniors and help them to have a happily ever after retirement.
right. So you had mentioned once before that individuals who can also use reverse mortgages to purchase a property, which is something that I never knew about. Could you talk about that?
Yes. So I had a client referred to me from a realtor. This family was moving from Arkansas back to Colorado to be close to family. The husband wasn't in the best of health. He had to be on oxygen at the altitude. And he wanted to be sure his wife was going to be okay if he proceeded in death, which he thought he would. And so they bought a single level patio home with no maintenance. And they didn't want to use all their money, so they put 60% down. The government put up 40% with the reverse mortgage, and they got a nicer home in an area of town they wanted to live in with updated amenities and no
Okay.
mortgage payment. So, quick update on this story. 6 months after we closed, I get a phone call from the wife, and she says, "Hi, Kevin, it's Sharon. I don't know if you remember me." "Oh, of course, Sharon. How are you?" "I wanted to let you know that my husband passed, and you had told us if we stayed in this house 6 months or more a year, paid the property taxes, paid the homeowner's insurance, maintained the home, we wouldn't have a mortgage payment. Is that true?" I said, "Yes, that's the case." She said, "Oh, good," with a sigh of relief. She goes, "This is the only way I can stay in my home." See, with a reverse mortgage, a payment's optional, it's not mandatory.
Hmm.
With what most people have, they have a mandatory payment. If you don't make the payment, you're getting a call from the creditor or the mortgage company
Right.
saying, "Hey, where's the money?" With a reverse mortgage, the house owes the money, not a person.
Hmm. So in essence, like you said, they don't have to. You don't necessarily have to make a mortgage payment. You can wait until the term of the loan to make the payment, and if you die, if it goes to your heirs, they can choose to keep it or sell it.
Right. The heirs have up to 6 months to do something with the property, sell it or refinance it. But if they need more time, they can get 2, 3 months extension. So basically, to have a year to sell or
Mhm.
You mentioned the term of the loan. This is interesting. The term of the loan goes to age 150 of the youngest borrower. So
Wow.
they've designed a program where you cannot live it, right?
Okay.
That's the purpose.
Okay.
They want
So
you to stay in your home as long as you can.
right, and that's another thing that I hear a lot of people talking about is that, oh, if I do this, they're going to take title. My name is going to be removed off title. They're going to own it, and I don't own it. Could you talk a little bit about that?
So it's a good question. That's the number one myth that people believe. In fact, I often sit with people, and the first thing out of their mouth is, "I know I got to sign over the title of my house." I said, "No, you don't." In the late 80s, when the program started being overseen by Housing and Urban Development (HUD), that was the case, but it hasn't been that way for decades. But people have that in their mind. They think that's
Right.
what it is. I think that's one of the reasons why people are resistant to look at it. Actually, is
Right,
they
because they're
can't.
afraid they're afraid that they're giving something that they bought, they're giving it away, and that, like you said, thinking that they're giving this to their children, but it's the money, the equity within the property that they're giving to the kids. So, who do you think this type of product would be good for? Because you have a lot of people who are now 55, approaching 60. They're looking at their savings and they're saying, "Hey, I don't have hardly anything for retirement. I have this house, but I want to keep that for the kids." What would you advise them to do? I know that you would have to know their full financial situation, but just based upon that, what do you think people should start looking at?
Yeah, it's a good question. If they can position themselves to do a reverse mortgage as soon as possible, the earliest you can do one is age 62.
Hmm.
So they can either have enough equity at that point to not make a payment anymore, and then take that money and start funding their 401k or their IRA, that they're going to be in a better spot. They can delay Social Security. If they can get a line of credit, if they have more than 60% equity, then they can get a line of credit that goes 4 to 6% a year, guaranteed compound interest, protected from the market. They're going to be in a much stronger position.
Right. Now, what if the person owns a home right out? Would this be a good product for them?
Yeah, that's a good question. So the way most people use it, we talked about the HECM for purchase, how somebody can buy a house with a reverse mortgage.
Hmm.
The main way people use it is to eliminate a monthly mortgage payment.
Right.
So the very first lady I helped was an 84-year-old gal, referral from a client, and she lived in a duplex, had a mortgage payment of 700 a month for the units. And I asked her, I said, hey, why are you thinking about this? How's this going to improve your life? She said, well, money's tight and I got to watch my money. And I said, yeah, I understand, but what do you mean? Tell me a little bit more. She said, well, to be honest, I have to use credit cards to buy groceries. So at the closing, we're paying off her mortgage payment, 700 a month, 300 credit cards a month. That's $1,000 a month. We're freeing up for her budget. And all she had was Social Security and the rent from that duplex. I said, so Carmen, how's this helped you? How's this going to improve your life? She kissed me on the cheek and she says, you know what? I can sleep at night. I don't have to worry about money anymore. So the number one way people use it is to eliminate their payment. And then
Hmm.
we talked about how people use it to buy a home, not have a payment.
Hmm.
The third way is to answer your question. If somebody owns their house free and clear, is this a product for them? The baby boomers are house rich and cash poor. Most of their net worth is in their equity. And so what we can do, if they're 62, we can take 40% of their equity. Let's say it's a $300,000 value of the home. We take 40% of that, which is 120, and now they're earning 4 to 6% a year, guaranteed, compound interest, insured, protected from the market downturn if it happens again, on that 120. Now they may not need the money in their 60s, they may not need the money in their 70s, but that compound interest is growing. Let's
Right.
say it grows at 6%, just for example. The rule of 72, you take 6 into 72 tells you how fast money will double. 12 years. 62 to 74, now that 120 is 240. They don't touch it. And they let it go another cycle. And now they're 86. Now they have $480,000 that they can access tax free. And they're going to need more help as they age. They're going to need
Wow.
people to come into their house and take care of them. There's just needs that people have as they age. I mean, the body wears down and they just need more help. So
Right.
this is a way for somebody who currently, think about this, Rob, they're currently earning zero on
Hmm.
their. I'm not talking about the appreciation. They're going to get that. They'll get that
Right.
even with the reverse mortgage. They're going to get that. I'm talking about that equity of 300,000 sitting there earning zero. At least now you can take part of it and put it to work for you.
Exactly. Well, this is really good stuff to know. Things that, like I said, I'd heard people talk about reverse mortgages, but they were always afraid. So, Kevin, what other tips could you give us? Tips that you've written about in your book? And, well, for one, where can people find your books?
Yeah. They're on Amazon. I also have a website, reversemortgagebook.info, where they can get them. And all the proceeds go to help charity. I don't keep any of the money. I didn't write it to make money. I wrote it to educate people. And so whatever money I make, I just give it away.
Oh, that's good to know.
And I would
And
say, you asked about tips. You know,
yes.
you got to think about the equity. There's only three ways to access your equity. You can sell your house. You pay the listing realtor 3%. You pay the selling realtor 3%, and then out of your proceeds, you're paying 6% to sell your house. You can do a cash out refinance or a home equity line of credit and have a mandatory monthly mortgage payment, or you can do a reverse mortgage that can unlock or give you access to your equity. Think about it this way: your equity is frozen right now. You can't get to it,
Hmm.
but we can unlock it or give you access to it. And that's what people love. They love the flexibility of how they can access their money. So this is something we haven't talked about. People can access their money, their equity, three ways. Lump sum, let's say they want to remodel a kitchen or take a trip or buy a car. Your money's there. It's your money. You can access it tax free. Monthly payments, a lot of people, all they have is Social Security. And
Right.
so they're getting the check every month dropped into their bank account tax free. That makes a difference for them. Or how most people start is with the line of credit. Because again, they may not need it now, but they're just setting themselves up for the future when they're going to need more money.
Right.
And that's the line of credit that goes 4 to 6% a year, guaranteed, compound interest, insured, protected from the market downturn. So it's a lot better than a HELOC. So we used to get calls in the late 2008 and 9, people saying, "Hey, the bank just froze my home equity line of credit. Can they do that?" Yes, the contract allows for that. They just cut it in half. Can they do that? Yes. Hey, I just got a demand letter saying I got to pay it in full. Can they do that? Yes. With a reverse mortgage, none of that can happen. A HELOC, you pay interest. A reverse mortgage pays you interest. A HELOC demands a payment. A reverse mortgage, you get a payment. I mean, it's like this super equity. It's not even apples to apples. It's just so much better than a home equity line of credit. But I'm rambling on, and you may have
No,
more.
but this is real. No, this is really good stuff. This is good stuff for people to know because I know that a lot of people do look at the HELOCs and they wonder why, hey, the bank cut off my HELOC and they sent me a demand letter saying I have to pay it off because those were the terms. Whereas, like you said, with the reverse mortgage, it's completely different. You're living, the interest is being paid to you. And a lot of people think that Social Security will be enough. Then once they retire, they realize that, hey, I need more money because there's money that's going, as opposed to coming in during my working years, money is now going out. And by having, like you said, this type of product, you can live pretty comfortably.
Well, two things along that line about people having enough money. Um, I looked back 40 years with Social Security versus inflation. I wanted to see if Social Security was keeping pace with inflation over 40 years. It has not.
Uh,
Inflation's winning. People are living on less now than they were 40 years ago because inflation. The other thing is, I had a couple come to me one time and they said, we're thinking we're just going to sell our house in retirement. And my dad was a realtor, and he drilled into my brother and I. Look, guys, buy a house as soon as you can. When you're renting, you're throwing money away. Don't do that. Buy a house as soon as you can. So I went back and I looked in my city, Colorado Springs, and I looked at the average rent 2 years ago in the summer, 1156 a month for a two-bedroom apartment. 1156 a month. I know it's a lot more in New York, but 1156. And then I did a 1% increase a year for 30 years because financial planners are telling us you may need to have enough resources for 30 years of retirement. We don't know how long we're going to live. We're healthy. We're living longer.
right.
At the end, it's right at $500,000 that you're spending in rent, and you have no asset to show for it.
Mm,
So that's not a good decision.
right.
Keep real estate. Your real estate is a golden goose. It's going to pay you, and it's an asset that you can leave to your kids at the end when you move on to um, eternity or live somewhere else.
Exactly. Well, Kevin, I have really enjoyed this conversation, and you really educated our listeners and viewers on more about reverse mortgages and what they thought it was 20 something years ago. So, folks, you've been listening to Right Now Network, Right Now podcast with Rob Harper, and my guest today was Kevin Guttman. And as I mentioned, you could pick up his book on Amazon. Kevin, give your website one more time, please.
ReverseMortgageRevolution.com. Or if people want to talk on the phone and visit on the phone and talk about this for their situation, I have a toll free number, 833 My Equity, which is 833-693-7848.
Thank you, Kevin. And folks, have a great day. Thank you. Bye bye.